Hi everyone, my name is Mary Redmond. I wanted to talk about the euro pound again for this week. Even though I talked about it last week, I still think it's a good trade. And the reason for that is it's fundamental and technical. And basically the euro has been on a tear against other currencies lately, and I don't think it's possible that this is going to continue. And there's a fundamental disconnect between what's going on with the rising interest rates and rising credit default spreads in many of these European countries and the euro, and it's just not possible to continue. And the financial markets, the bond markets, have also started to reduce their expectations for rate hikes from the ECB going forward. And I think that there's really, nothing that anyone can do about this as terms of a quick, easy solution. It's just going to be something they're going to have to contend with for a long period of time. But I do think that there was an overestimation of how much the ECB would raise rates. And yet, since that's changed a little bit, the euro hasn't really made as much of a move down as it should. And in contrast, the pound may not have moved up as much as it will in anticipation of interest rate increases, because the UK was in a contraction for the last period. And of course the Bank of England doesn't want to raise rates when they're in a contraction. It would really put a squeeze on the economy and a squeeze on consumers. But they're still anticipated to raise rates at some point in the next 6 to 12 months. Probably they're going to wait until the economy gets a little bit more stable and shows some really some good, strong, stable growth. And if that happens this week, if the UK GDP comes in showing positive growth that's maybe a little bit above the expectations of 0.5%, then I think you could really see a good short in the euro-British pound, because then you've got a situation where the ECB already raised rates and they're more likely to slow down, and the Bank of England hasn't raised rates yet and they're more likely to start. So that's the circumstance under which this would be a very good short. And it broke out of its rising channel here. It looks like it's forming a nice diamond, and a diamond is usually the top or the end of a particular trend. The diamond occurs at the bottom of a trend. It frequently signals a trend change towards an upward move, and at the top it can frequently signal that there's going to be a trend change towards a downward move. And from this perspective also, it looks like the technical indicators are pointing downward. And we've also got, of course, the US Fed meeting this week. So it's harder to trade the US dollar pairs going into the Fed meeting, of course, because the markets and market participants are going to hang on every word. And if the Fed chairman says something that's not expected, or the statement isn't really what people expect, then of course you could get stuck in a position and you might not be able to get out. Well, the other pairs won't be affected as much, although I have just noticed a little bit that the euro pound does tend to rally when there's an appetite for risk in the market and when the stock market's moving. And maybe because the euro is considered to be a somewhat riskier currency. The pound isn't really a risky currency because they're expected to keep their AAA credit rating, and they're not really involved in the issue of bailing out any other countries that have these sovereign debt problems. So I think this is a nice pair to short going into this week. It would be very risky to hold it over the pound. The news of whether or not the UK economy will be growing or contracting, the GDP growth this quarter, but unless the growth rate for the UK economy comes in much weaker than expected, I don't think that's going to change the fundamentals of the euro pound going forward. I still think that's a good short at or slightly above current levels.